And we are going to hear from Kamil Szymański from the Brokerage house of mBank, who will talk to Thiemo Storz, who represents WisdomTree, one of the largest ETF sponsors globally. So let's find out what they can tell us about ETF markets. Kamil, over to you.
Yes, thank you.
Hello, I'm here.
Thank you. Thiemo.
Thiemo.
Welcome to our conference. We're really happy to have you here. And please tell us a few words about yourself, and please introduce us to WisdomTree.
Thank you, Kamil. Thank you for the introduction, and I hope the sound quality is good for everyone. Thank you for the opportunity to be here today for WisdomTree, and this is a great opportunity for us. And I can imagine it's a bit helpful for everyone to get a bit color on the firm WisdomTree and who we are. So my name is Thiemo Storz. I'm heading the German-speaking region at WisdomTree. That includes Germany, Switzerland, Austria, and Liechtenstein. And we're also looking after clients in Poland, for example, for inquiries, and we are more than happy to help and support clients over there. And that's why we enjoy to be here today. Maybe I give you a little bit more background information about who is WisdomTree and what are we doing today. So WisdomTree has launched their first ETF in 2006 in the USA, and WisdomTree is New York based. It's a pure ETF, ETC provider. And at the same time, there was another firm. It was called ETF Securities. We were based in London, in Europe, and ETF Securities was well known for their commodity business. And in 2018, it was WisdomTree who acquired the entire commodity business of ETF Securities. And today, WisdomTree combines a total AUM of 69 billion globally. That includes roughly 40 billion of assets in the USA and about 29 billion in Europe. And today we are one of the leading independent ETF and ETC provider. And we cover a lot of asset classes. Obviously, commodities is one of our major business. And on top of that is gold. So gold is a very important topic for us. We have a market share of roughly 22.7% in Europe in the gold market of ETCs. And in total, we have roughly 17 billion of assets in precious metals and gold in total. We do have certain ETFs and other strategies, which we are probably going to look in a few more questions later into it. I hope that was a good introduction. Kamil, back to you.
It was a very good introduction. So you are a truly global player. And the first thing that I wanted to touch on was the previous year, 2020. What did it look like from your perspective? Because obviously the previous year was like no other by any standards. In terms of ETF sales, it was definitely a breakthrough year in Poland. We've seen ETFs gaining popularity in recent time. But 2020 was an absolute breakthrough. And whether we're talking about the products listed on the Warsaw Stock Exchange or whether we're talking about clients accessing ETFs through the foreign markets, the sales just gone through the roof last year and they don't stop. They just continue to grow. But a lot of it can be explained purely by the fact that the local market is catching up. But what did the previous year look like from your perspective? A truly global established business in the field of ETFs.
Yep, thank you. Last year was, to be very honest, was a very interesting, volatile and unpredictable year. I think it was the same for all of us. So not just the fact that we had the COVID crisis coming into play more and more, and people considered investment decisions more and more in line with the effects of the Corona crisis. And obviously, all of us went to work from home, which we are still doing, as you can see in my background. So that's no surprise for the moment. And in terms of what did we see on the ETF and the ETC sales last year, I think everyone remembers in the first part of the year, the oil market crisis. So we had a very interesting situation on the oil markets. First time we have seen futures or front month futures in the oil market at a negative price. And WisdomTree has a broad range of oil products. And this was a very volatile and interesting time for us. We had a lot of investor inquiries about the oil business. How is it working? How is it going on? What is the future in the oil market? What are the effects on the products when we see negative prices? So this has definitely been a beginning of the year, which came right after the COVID home office situation, which was a very interesting one. Meanwhile, we had almost 1.5 billion of new inflows into oil ETCs. And this was a very big driver of the business at this time of the year. If you're looking at oil prices are related to the economic cycles. But we saw at the same time the economy is struggling. At this time of the year, we discussed, do we see a V-shaped or a U-shaped recovery in the economy? And this was a lot of uncertainty in the market. And gold is especially a product and an investment that comes into play when you have uncertainty in the market. So gold ETFs and gold ETCs basically have experienced a lot of inflows at this time. And this was a very positive driver for the business. On the other hand, you have also the industrial metal sector, which was really under pressure because the economy was clearly slowing down. We had a lot of redemptions towards the end of the year from the previous oil investments. People are very tactical when they play oil. So they take the opportunity and they also take the profits at a certain point in time. Industrial metals had a very tough year. This is something that we observed this year as being a very exciting trend again. On the other hand, the thematic investments have been an absolutely interesting part last year. So there are investment solutions in areas like cybersecurity, in cloud computing, artificial intelligence. You have to think this whole home office environment was opening up a lot of new risks and opportunities at the same time. So we have firms in the global market that are really dedicated and focused to provide cybersecurity or artificial intelligence solution or cloud computing solutions. And a lot of businesses went into a cloud system. The demand for cybersecurity was increasing. And these investment themes have really picked up last year and also the previous years. We could see in different teams, people were investing. So the thematic investments have been a very interesting driver for us towards the end of the year. At the last point, the latest vaccine news that came into the market towards the end of 2020 caused a little bit a risk-on sentiment on the market. So people were a bit more dedicated to position money again into the equity market. And consequently, we saw a bit more outflows on the safe haven part, which is mainly gold in the market. So we had towards the end of the year a bit redemptions. But all in all, I have to say, 2020 was a exciting, volatile, but still a fair business for us.
A lot of the things that you've mentioned, we observed at mBank as well through the activity of our clients. We definitely observed this oil craze at the beginning of the year. But the product that's been popular throughout the whole year, one of the most popular products, was gold ETCs that you've already mentioned. And clients like is specifically the ETCs that are backed by the physical commodity, the physical gold. And the question that we get quite often from clients is that how do you ensure on a daily basis that all the clients' positions are evenly matched by the physical gold? Because on one hand, you've got everyday clients making hundreds or tens of transactions going back and forth in a very liquid market. But on the other hand, you've got, it's all backed by a stack of gold sitting somewhere. Probably it's not even easy to move around. What's the logistics behind it? How do you make sure that at the end of the day, what you've got in gold is backing clients' positions after another trading day?
So that's a very interesting question, which we got more and more last year when people discovered gold as being a safe haven assets and investing more and more money into that vehicle. So you have to look at the commodity market as a whole. I just want to give a little bit of background to answer your question, please. So the commodity market as a whole, you have precious metals like gold, like silver, like platinum and palladium. Those are fairly reasonable to store somewhere and insure, and they don't take a lot of space. And a bar of gold is still a bar of gold after 1 year and after 2 years. You have another part of the commodity market, such as industrial metals. You could theoretically store them as well somewhere, but it would take a lot of space to store tons of copper, for example, and the costs for custody and for insurance would be too big, and it wouldn't make any more sense to have a physical backing of industrial metals. You also have commodities such as energy, like oil, where you have to issue again, where do you store oil? This might be feasible, but 1 barrel of oil might not be a barrel of oil after 2, 3, 5, or 10 years, just because of its nature, of its liquid nature. So there's some oil obviously probably missing after a while. So the benefit of precious metals is you have the chance to store them physically. And that's what we do at WisdomTree. Our precious metals products are physically backed, as you said. And now I'm coming back to your question. How do we ensure that we do have the respective amount of metal in the bag? So we are not just backing our entire precious metals with any kind of gold or any kind of silver. So there are certain market standards that we are looking at. So basically there is the LBMA, it's the London Bullion Market Association, and they are responsible to set a lot of standards about gold and silver. The LPPM is the London Platinum Palladium Markets. They do the same standards and guidance for platinum and palladium. So the gold that we back for our investment products is LBMA, good delivery standard gold. And these are roughly the 12.5 kilo gold bars that we store. I just want to answer the question based on gold now before we confuse too many different topics. So when we do see a creation in the market, we have to differentiate between a primary market creation and a secondary market creation. So on the secondary market, you have a lot of shares that are circulating on the various exchanges like Frankfurt, like London, etc., for this particular gold ETC. So when investors are buying and selling those shares on the secondary market, for those shares which are circulating and trading at the secondary market on the exchange already, for those shares, gold has been backed already. So the gold is already there and the shares are trading on the secondary market. If you have investors, especially from the professional investor side, from the institutional investor side, who create multi-millions of gold a day, obviously there's not enough shares circulating in the market to meet this requirement. That's why we talk about the primary market. In the primary market, we create those shares and consequently we have to back more gold into the vaults. In this system, you have 3 parties basically. One is the issuer, one is the trustee, and one is the custodian bank. So you asked me where the gold is stored. So the gold is can be stored in various locations. We, for example, at WisdomTree have a vaulting location in London, but also a vaulting location in Zurich in Switzerland. So it depends which product you choose. You have one or the other vaulting location. And when we see a creation in this product, it is the issuer who is creating those shares, giving them to the investor, or those are trading on exchange. And in order to back those shares with gold, we put physical gold into these vaults and allocate it. In the vault, you have basically 2 spaces. You have a space which is called an unallocated account. So there is gold sitting, and it is in the insolvency mass of the custodian, which is not a good thing. But as soon as this gold is getting allocated, it's moving from the unallocated account into the allocated account. That means it is specifically allocated for this gold ETC. And these are the big 12.5 kilo gold bars. And those bars have to have a certain troy ounces. It's between 350 and 430 troy ounces. They have to have a fineness, which is 995 parts of it. They have a serial number because we have to identify those gold bars in the back. And there's a list where you can check all these gold bars. And there's an inspection twice a year where people inspect whether all these gold bars are really there. They have a year of manufacturing, which is a very important part. And also on the other hand, these gold bars in the allocated account are out of the insolvency mass of the custodian or of WisdomTree. We have no right to touch this gold anymore, and it's backed for this particular product. Now you're thinking, if you are allocating 12.5 kilo gold bars, there could be a gap which is not filled because either I put an additional bar in it or I have this uncovered depth in the vaults, which is not covered, or the product, there's a certain part which is not covered by gold. But there's this concept, we call this kind of a swing bar. You have to think it's a sponsored gold bar that we put on top of the vaulting, of the total amount of gold there, in order to ensure that the product is at least 100% backed with gold. And in the end, to conclude the question, your ETC is basically the price of your ETC is the LBMA spot gold price multiplied with a metal entitlement. And the metal entitlement is an entitlement that you own with your ETC on the underlying metal. And also the fees for your product are calculated on the metal entitlements. So if the fees of a product is like 0.15% a year, it's a concept where we kind of take away 0.15% a year on a daily base from your underlying gold. This is just a theoretical way of calculating it.
Okay, so I get there's a complicated process of inventory management, in this case, the inventory being gold. But my understanding is also that as a process of this inventory management, you might end up with a surplus of gold, but you're not likely to end up the other way around with not enough gold to cover all the positions of in the product. I wanted to ask you what type of gold you're using, but you've already mentioned that. But I've also recently noticed that some ETCs, some providers, and I think you've got products like this as well, they offer an option to exchange your ETF, your ETC for gold. So rather than going to an exchange and selling the product on the exchange, I can buy a gold product on the exchange, but rather than selling it on the exchange and getting my money back, I can choose to receive a physical gold in exchange of my ETC. Now, is anyone ever, because I've never came across a client who used that option, is this popular? Is anyone using it, or is it just a bit of a gimmick to make the product look more attractive?
That's a very interesting question. We do offer the physical optional delivery for some of our products, but it's an interesting feature. People like to see it, but barely anyone is executing it, doing it. It is, from an administrative part, a big project, basically, because we have to have a certain party, we call this a metal agent, in place. Because if the client has the option to get physical gold, we can't give the client the 12.5 kilobars theoretically, respecting some people might not have invested that much money to have a full gold bar. So that's why we need a metal agent in place who is basically taking care that we make small, let's call it retail friendly gold coins out of these big gold bars. And this is a metal agent who is basically taking care to deliver gold coins or silver coins, if that's an option, to a respective end client. This process is actually a bit complicated. So there's a redemption form needed. You have to make clearly, you have to send this redemption form to us. The bank of this client has to do a KYC about the client. And then it's also important for every investor to be sure that the gold can also be delivered in your local country. So gold delivery may not go into every country. There's only a certain list of countries where gold is getting delivered. At WisdomTree, we have not seen a gold redemption request yet, where the end client requested gold coins in kind. We do have this feature for products, and we do have a metal agent in place, and we do have all the necessary tools and equipments to do it. And yeah, it's an interesting feature. For maybe to sum up the question, this is a very popular feature for clients at private banks, at wealth managers, where you have an individual person behind it. The individual person may have this interest to get the physical gold in the worst case scenario, for example, or if that person does not want a cash settlement, he can ask for the physical redemption. This is a feature which we don't see at the institutional market, and this is also a feature which the institutional market is trying to avoid to get the physical underlying. Maybe one point that I didn't touch before is when we back the products with gold. We know from a lot of other asset classes like the ESG move, where we look into environmental, social, and governance criteria. And this is something we also have in the gold market, for example. As mentioned, the LBMA has a guideline for responsible gold sourcing. So we are looking basically, where is this gold bar coming from? So as said, you have the year of production, you have the refinery of the gold on it. And there's a standard to say, if you back your gold product with post-2012 bars, you have a certain, let's say, you're following the guidance to avoid money laundering, terrorist financing, or any human right abuses globally. And there's also a LBMA guideline for bars which are produced post 2019, which are even a more strict guideline for gold bars that you back for your product. And just to conclude the question on what kind of gold are we backing?
Oh, thanks for that. You've confirmed what I've suspected about the physical delivery, that it's a feature that a lot of clients like to see in a product, but they're not really using it. Throughout the conversation, we've been using terms ETF and ETC. Now, this conference about passive investments, about ETFs, but we keep mentioning ETC. Now, ETF stands for exchange traded fund. ETC stands for exchange traded commodity. And ETCs, well, most commodity products listed on the stock market would fall under the ETC. Now, from the point of view of investors, ETFs, ETCs, in many respects, there's hardly any difference. You buy them the same way, you sell them the same way. The cost is very similar. They do the same job. And in most of literature, even serious literature about the subject, the two terms ETF, ETC are used interchangeably. But there is a difference. There is a difference between ETC commodity products listed on the stock exchange and your typical ETF. And it's perhaps a difference that every investor should be aware of. Could you please highlight to us what is this main difference, and is there anything there that investors should be mindful of choosing to invest into a commodity product like ETC?
Yes, that's a very good question. This is a question which we still experience today from a lot of investors. These terms are really used exchangeably with each other, which is unfortunately not the right way to do it. So an ETF is basically what a lot of investors know when they buy a fixed income ETF or an equity ETF. Could be a thematic product, which is an ETF. Legally, the ETF is a segregated account, mostly with stocks or fixed income. Could be also a multi-asset one. But the key point is an ETF is diversified at some extent. So there's the rule on diversification. There's a 5-10-40 rule, which is needed. And at the bottom line, an ETF has to be diversified. While if you're looking at commodities, a commodity is hardly diversified. I mean, a gold product is not diversified at all. It's just gold. There's nothing else. Even if you look into industrial metals basket, you may have 4, 5, 6 different industrial metals, but again, those are not really diversified from each other. So in the commodity space, when you replicate a single commodity, there is no choice for an ETF. It has to be an ETC, and the ETC is a debt security. A debt security is alerting for a lot of people because they are afraid they borrow the money for this ETC vehicle, and it's maybe not even collateralized. The precious metals product, just as the gold, as explained before, is backed with physical gold or silver or other products with the respective metal. So they are physically backed. Even on the ETC side, like oil or industrial metals, those products have fully collateralized swaps. So there's a swap in place, but it's fully collateralized. But coming back to your question, there's no choice from us to make it a commodity ETF. We have to stick to an ETC. It would be different if we built a product that is replicating gold mining companies or industrial metal mining companies. This would be a different topic. This could be structured as an ETF, but mostly we have to stay for single commodities, and for baskets, we have to stick to the ETC structure. So there's no choice to make an ETF.
Mm-hmm. You've just mentioned clients choosing to invest in companies or a diverse basket of companies as an alternative to investing in commodities. And many clients, for various different reasons, when they're looking for exposure to, let's say, gold, they actually choose to buy gold mining companies or an ETF offering an exposure to gold mining companies. And rather than invest in oil, they might want to choose an ETF investing in a basket of oil companies. And the question to you is, what's the main difference between direct exposure and going for a basket of companies that are related to the product? Are there any pitfalls there? Are there anything that clients again, should be mindful of when they're trying to make a decision. Should I go for gold or should I invest in gold mining companies?
Yes, this is a very common, very complex topic, to be honest. So at WisdomTree, we do not have any exposure to the mining companies on the equity side. We focus purely on the commodity itself. And it's really the choice of the investor to choose if he's choosing gold mining companies or energy companies, such as the big BNPs, Shells, etc., which you know, or if he's choosing the oil product or an oil investment directly. One point to note is one is a commodity, the other one is an equity firm. So there are a lot of differences. The fundamental drivers behind both is very different. So you have some, let's call it benefits on the equity side. You have an equity firm and you may even have a dividend, which is an interesting part for a lot of investors. But again, the equity firm has some fundamental drivers which could lead to uncertainties. For example, an equity firm can be involved in financial trouble, in refinancing issues. They can have strikes. There can be any other situations that cause the equity price to drop. On the other hand, if you're looking into the commodity price, for example, if you have a strike in the mining sector, you may have an issue with your mining stock because this stock may fall because of the strike. People don't work, the mining company is not operating, the share price of the mining company might drop. On the other hand, if there's a strike and the company is not working, then we have from the supply side for this certain metal, let's call it copper or maybe it's nickel, whatever you choose, there's a supply deficit suddenly because this metal, which should be mined, is not getting mined. And so it's not arriving in the market and the market has a shortage for this certain commodity. And consequently, the price is rising for this commodity. It's the same for the gold mining companies or for the energy companies. So there are benefits and advantages and disadvantages for both. A disadvantage maybe on the oil side is, that's what a lot of people experience, is when you invest directly into oil, as said, we cannot have the barrel of oil in the back. So we need to choose a structure. Obviously, it's an ETC because it's just oil, it's not diversified. And we have to choose a structure which is swaps based. So we have futures which are rolling. So you are invested into futures and those futures are rolled on a monthly base. And when you roll a future contract, in the moment when you roll the contract, you sell the current contract and you buy the new contract. Because if you don't sell the future contract, at one day someone is knocking your door probably and gives you the barrel of oil. And that's, I think, something no one of us wants to have in front of the door. That's why we have to roll these futures. This rolling is happening automatically. And so this is not something that we decide discretionary. So there's, for example, the Bloomberg Commodity Index family, and there's the Bloomberg methodology that's rolling those futures. When you roll the futures and you have a situation like in the oil market crisis at the beginning of 2020, where prices drop massively, then you have a curve of the future market, which is rising. That means the market expects higher prices in the future than today. That means when you sell your contracts today and you have to roll those contracts over into the next contracts, you have to purchase contracts, the new ones, which are at a higher price than the current ones. So if you sell something at a lower price and have to buy it at a higher price, that's causing a loss for you. And that's a tricky situation in the oil market. That's why people usually stay very tactical in the oil market, because the more often you are rolling and you are in such a contango situation, that's when the future curve is rising and you have to pay more money to stay to roll the futures. That's obviously a situation that is a negative impact on your total return of the product. While there's an advantage of being in an oil company, for instance, for some investors, but in a market that is not experiencing such massive price fluctuations, like in the gold market, there's not that big risk of having such big roll losses, where then, for example, industrial metals is not as heavy affected by the contango situation as the oil market. And if you have let's say the luxury to invest in precious metals, which are physically backed, there's no future contract, there's nothing you have to roll. So you have basically a very good and a very great situation to be invested in gold instead of the gold mining company.
Okay, so it's definitely a complex, very complex subject, and there's obviously advantages and disadvantages of each approach. But I think in short, we can sum up. investing in companies, even though those companies might be related to the price of the commodity, it's simply not a one-to-one alternative to buying commodities. In some cases, it's even very far away from being one-to-one alternative, isn't it?
Yes,
I wanted to perhaps for the last time touch on the physical aspects of the ETFs, ETCs, ETFs as well, all the products. Now, investors have this natural tendency to prefer physically backed instruments, physically backed ETFs, and there's definitely a logic to it. Yeah, it gives us a bit of sort of comfort, sense of security to know that there is something tangible at the end of our investment. So, all else equal, if there's two similar products, most clients would most likely choose the one that is physically replicated, physically backed. And I wanted to ask you, from the point of view of someone who's working for a company, who's actually issuing those products and putting them on the market, is there a real benefit that physically backed ETFs, physically replicated ETFs offer over the synthetic alternatives?
That's again a very interesting question. If the physical backed products are that much safer than the synthetic products. Synthetic means there's no physical underlying in the back. So if we are looking into, maybe you specifically asked for ETFs, so maybe this does not include commodities at this moment, but if we stay to the ETF side, you can physically replicate an ETF by really physically buying all those stocks on the index level. That's fine, and that's a certain way of security because those stocks are really there. You have to imagine if you are accessing markets or investments which are, let's say, a bit more difficult to access. We know this maybe from the emerging market side. Then obviously a physical replication has a challenge because you may have a lot of costs and issues or even liquidity concerns to buy all those, let's say, more exotic stocks physically into your ETF if this is part of your exposure. So synthetic replication would help here. Also in terms of rebalancing, ETFs are rebalancing. The more physical stocks you have, and depending on what weighting approach you have and whatever the rebalancing is aiming for, a large number of physical stocks could be also increasing costs and complexity when you rebalance a product versus a futures-based or swap-based product where you have no physical stocks behind. At WisdomTree, we don't have physical replicating ETFs in this case. So we have synthetic replicating ETFs. Everything is physically replicating on the ETF side at WisdomTree. Apologies. So there's a certain, but looking beyond WisdomTree's approach, if you have a physically backed ETF, you have to also ensure that whatever product provider or issuer you are using, that this issuer is not, for example, lending out the stocks again. Because there's a concept which is called stock lending. That means even if you have a physically backed ETF, it could be that the issuer is lending out those stocks to someone else for another business purpose. So basically, then you suddenly lose the big benefit of having a physically backed product. A synthetic product, on the other hand, is not physically backed, but it doesn't mean it's like with a huge risk to the investor. Because even if it's synthetic, that means futures-based, swap-based, those, since the financial market crisis that we experienced in the mid-end 20, there has been a lot of improvement in the market also to collateralize those synthetic or futures-based products. And so in most cases, that's a very popular case also for the commodities. It's futures-based. So this commodity is, for example, not really in physical behind the product, but you have futures, and those futures there's a bank, like an investment bank, who is giving you the swap of this whatever exposure, and those swaps are collateralized. That means this investment bank who is giving you the swap has to post a collateral. Collateral is something that, for example, the issuer defines as securities, which have a certain eligibility criteria defined by the issuer or by the product provider that this investment bank has to collateralize. And this is mostly with a custodian bank. And this custodian bank is monitoring that there's enough collateral to back the swaps. So if there's a worst case scenario, there is still some underlying securities for an investor available that could be probably sold in the market to get the money back. So there have been a lot of improvements in the market, but obviously I'm speaking very general, so I can't speak for the whole industry. Some people do it, some people may not do it. At WisdomTree, we stick to the physical replication, and neither stock lending is something that we are doing in the moment, nor there could be also the concept of metal lending. We could also lend out the gold or silver, but before we create any fears, we are not doing that. This is not our aim.
I wanted to come back to something very exciting you've mentioned at the very beginning, which is thematic ETFs. Now, looking at what our clients are, their investment choices, definitely number one field or one of the three most popular fields is commodities that we've already mentioned. The second one is broad indices. So we're talking about ETFs for indices like S&P 500 or even MSCI World, NASDAQ. When we look at the Warsaw Stock Exchange, that would be an ETF replicating the performance of VIG20 index. But the third area that is getting increasingly popular is thematic investing. Now, obviously, thematic investing has been around for I think 10 years, but the concept of this product, it's very easy to understand. It's usually very exciting. We're talking about the companies related to what's going on in the economy right now. So we're talking about all those exciting themes like cybersecurity, clean energy, e-commerce. Those products have been popular for quite a long time, but they seem to be going from strength to strength and getting more and more popular amongst clients. What's your view on this? Do you believe the thematic ETFs will be so popular for another 10 years? And are there any particular themes that caught your attention lately?
Yep, there's definitely a certain success story behind thematic ETFs in the market, both passive and active strategies. And we have experienced thematic investments even on the commodity side. Because when you look into the battery technology, that's something that could be replicated also with a thematic product. But you have also certain commodities that play part in e-mobilization, in battery solutions. You have nickel, you have copper, you have zinc, you have all those various commodities that can be used and are used in the topic, in the theme, battery technology. But now shifting back to the thematics as a whole. At WisdomTree, we do have thematic products, such as in spaces like artificial intelligence, there's cybersecurity, there's cloud computing, there's battery technology, there are many other themes. This is something that we are looking at, obviously, and looking back into 2020 and also looking into the first part of 2021. Yes, thematic ETFs are in demand. And we try to be more and more focused on this project, and we have also diversified. We have a dedicated research team at WisdomTree. Some people are doing the commodity research, some people are on the equity side, some people are looking specifically into thematics. And we have defined a few themes and topics that is very interesting for us to look at. So we have defined 4 big buckets, for example. One of them is the demographics and social shifts. The other one is the technological shifts. The third bucket is geopolitical shifts, and the last one is the environmental pressure. So these are 4 buckets that we have defined in WisdomTree as thematic solutions. You have to think a theme is a good idea, but a good idea has to be also investable. There need to be a certain amount of stocks. There need to be a certain exposure of firms in the market. If you're looking into themes which are very hot or very new, you need also a certain amount of companies, and those companies have to be tradable. This should not be a garage firm yet. This should be something listed. And so it's a very challenging part. And this is something where investors should really take care to decide what thematic investment they're looking at, is to get a pure access to those thematic firms. It's very difficult to see those firms, to find those firms in the market. If you're taking your Bloomberg channel and you're looking into those firms, you may find some of them, yes, of course, but these are firms who are existing in the market for a while. They have reported financial statements, they have a stock history, etc. But a lot of these themes, a lot of themes that come up with the COVID situation right now, these are very new themes, and those firms may not be known yet. And so it's that's the challenge, to find those firms who are investable and put them together into, let's say, a strategy, a fund, or an index, which is replicated by an ETF. So thematic investments is something interesting because you like to talk about a story. And if you like to talk about a story and you can identify with a theme or a topic, that's always a good thing. I think every one of us wants to understand his or her investment. Why am I investing in cloud computing? What are the benefits? A lot of people identify this theme with their home working environment. Why am I using cloud computing in my company right now? What is the situation? So there's a lot of parallels, and for people it's a good thing if they can identify with their investment in the end of the day. So demographic shift is a very big part, social shifts, disruptive technology is a big topic to look at. Also hyperconnectivity and digitalization is a topic to look, and and there's also globalization and the climate change that is putting a lot of new opportunities into the market. And as said, these themes and topics need to be identified, and we have to find a way to access also those topics.
It's a very, very exciting area of ETF innovation in recent time. And talking about trends, now one of the benefits of working for a large brokerage house is that I can look into what our clients are buying. It's a very fascinating read, every month to look at the reports and to be able to see where the money goes. Now, you obviously, you wouldn't know what our clients are putting their money, and you wouldn't know where clients of other brokerage houses around the world are putting the money. But you've got this unique view of being able to see the whole thing. You see the global flows. You see where the money from the clients are from various different countries, where they all go together. And I wanted to ask you, where did the money flow in 2020? Where did clients put their money to 2020? And more importantly, where do you see the money's going right now? And maybe even more importantly, where do you think money's going to flow, continue to flow for the rest of 2021?
I think that's a very interesting question for all of us, and I can assure you I don't have the glass ball in front of me, so that's just the best guess situation. I can answer your first part of the question very precisely. Where did the money go last year, and where did the money go first part of this year? That's the easy part. That's where we have the numbers. Where does the money go until the end of 2021? That's the glass ball, which we don't have here. So an interesting part we just covered is thematic investments. That was a part, regardless of the risk situation at the market. We saw themes which are linked to the working from home environment, from the changes we all faced during the Corona crisis. We saw themes which had a huge demand, and we had our most net new assets in thematic investments last year in our thematic ETFs. In the end, but the commodity market has been an up and down situation. So at the beginning of the Corona crisis, gold was very much in demand, and as well as oil after the shock. Gold has been under pressure towards the end of 2020 with the vaccine news, because that was something where people turned into a risk-on situation again, put more money into the equity market, looking for more risk assets. And that's where gold was selling off towards the end of last year a little bit. This year, it's a mixed game. We see a very mixed situation for gold investment this year. We have on one hand, investors who are looking into gold. On the other hand, we have also investors who are selling gold for the moment. And something that concerns us, and I just want to give the highlight figures, is when you're looking into gold investments, we identify at WisdomTree 4 parameters to look at. This is the inflation. This is the nominal 10-year yields of the 10-year bonds in the US. This is the dollar strength, and this is the speculative positioning of gold in the market. We are looking at those 4 parameters. And for the moment, it's a very mixed situation to figure out if gold keeps in demand or not. On the industrial metal side, we see inflows this year, relatively significant inflows compared to last year. But the whole industrial metals complex has been under pressure when we started with the US and China trade war situation. That's obviously creating uncertainty and fear in the market. People didn't want to invest really in industrial metals. This is a topic that was also under pressure under the COVID situation, but now slowly we are moving back to interest in industrial metals. And as I mentioned, we also have copper, nickel, and zinc in the industrial metal space, which is a big part also of the theme like battery solutions, e-mobility, a lot of these things use commodities in the industrial metals space. And industrial metals are one of the leading sectors this year. And among industrial metals, it's copper. Copper is for the moment on top of inflows. And you have to think, if you a long time of period where people were not interested in industrial metals is also a reason where prices were really low. And a lot of mining companies did not really operate at full capacity. Obviously, this whole crisis with Corona was also avoiding some miners to work at full capacity. You have to think, when the market is coming into a recovery, when the economy is starting to recover, when the demand for metals is starting to come back, you have to think the demand is usually coming back much quicker than the supply can cover that, on the other hand. So that's a sector where we expect a lot of interesting flows this year in the industrial metal sector when demand is coming back. And we may have some supply deficits in the industrial metal sector where metal is moving around the world, going from producers to from miners to producers, etc. So this is a topic where we are excited this year, industrial metals. And the energy space is at a quite surprising high level. If you're looking into oil prices right now, you have to see how this is working out. In the moment, we have more profit taking on the oil and energy side at these levels. That's what we see for the moment. We have to analyze which price level should be a fair price for 2021. But for the moment, it's more the outflows that we see on the oil and energy side. And thematic investments, as I said at also the beginning, is also a topic that keeps going also into 2021 right now. So I can just repeat what you were saying for 2020. Yes, it's a very strong topic. The challenge of thematic investments is, how long is a theme hot? When is the theme out of favor? That's the big interesting part. And we haven't really identified yet when themes are becoming out of favor, because cybersecurity was a theme that's not the brand newest theme that we know, but it's a theme that's coming up due to the current situation even more again. So we have to monitor it, and we are also looking into further thematic investments. That's something WisdomTree is trying to look at, trying to make difficult market niche areas accessible, and thematic investments should be in the focus for this year as well.
Okay, so it's thematic investments, industrial metals. I'll keep an eye on it. Now,
perfect.
Nearly all of the questions that I've asked you, I didn't come up with them myself. These are the questions that we as a broker, as intermediary, being asked by clients. And if I wanted to direct it to you, every single question we've received about ETFs in the last year, I'm not exaggerating. We'll be talking to you for the next 3, 4, maybe 5 days or the whole week. But we only have about an hour, so we're coming to an end to our conversation. But I wanted to ask you one last question that clients are asking us quite often. Now, obviously, with the demand for ETFs growing and clients' interest in ETFs that just exploded last year, clients are looking for sources of information about the product. Now, obviously, the most trustworthy source of information for a client is the website, is the issuer itself, which means the website of the issuer. And clients are telling us that, I've gone onto the website of and I could now put a name of any issuer, with the exception of Beta Securities, that's listing products on the Warsaw Stock Exchange. But with the exception of Beta Securities, clients are telling me, listen, I'll go onto any website. They've got a version in Spanish, German, whatever languages there are out there, at least in the European Union. Now, nothing in Polish. And why is that? Is it because the ETFs are gaining in popularity just now, or is it, I don't know, Polish is a difficult language to translate things into? What seems to be the reason behind it?
That's an interesting question, Kamil. That's a question that I have to be honest, from the WisdomTree side, and that's also why we in the German-speaking region are taking care of Poland right now for inquiries, is that we didn't had that much knowledge about the Polish market in the past years, the past month. We didn't know the concept of the Polish market. There was not a clarity and transparency from us what is happening in Poland and what's in demand in Poland and which investment firms or who are the players in Poland, who should we contact, etc. So our whole relationship to the Polish market came basically out of Poland when investors contacted us. And I speak from both sides. I speak from retail investors who are using the support box of WisdomTree, or I'm speaking from institutional and professional investors who came across our products, who hold our products maybe for years and we didn't know. And they contacted us for product-specific information, or the same as what you just mentioned, is a language topic. And at WisdomTree, we have collected all this feedback over the past months, what we received from Poland, and we could clearly identify there's demand. We understood the market much better. We got a bit more clarity what is needed in the market. And then we also heard about the event today. And this is something where we try to also reach out to Poland and reach out with our hands and say hello and introduce who is WisdomTree, what are we offering, what can we do. Obviously now there's a big work to do from the issuer side, either it's from our side or from any other European issuer. That's exactly what you mentioned. You have to bring the whole website into a Polish language. You have to bring certain documents into Polish language. So we have started to translate the KIDs documents, the key investment document for investors, into Polish language. So it's easier for the investor also to understand the product structure. But then going further down the route and translating the website, offering local language research, like maybe in the end of the day, or MiFID II, which is not under the MiFID II regulation, just information about the products. This is something that we need to explore and to work on step by step going forward. And we are interested because we are each region in Europe having a certain concept of investing, has a certain mentality, has a certain demand for products. And we know this from Germany, we know this from Spain and France, and you named all those countries. But obviously, when we also speak to investors in Poland and we hear their feedback, we hear their interest, that's also helping us, because in the end of the day, we try to offer you solutions that meet your investment demand and to meet your strategies and to help you also to achieve your investment goals. And so that's a great opportunity, and that's something we are also keen to look at and to understand the market better.
Okay, so we are watching this space, and we hope for some developments in the coming, well, if not months, then in the coming time. Thiemo, it's been a real pleasure. Your insights, your views, it's been very informative, and we really appreciate we had a chance to speak with you today. Now, I'm not worried about the ETF business. It just seems to be going from strength to strength, and I just hope that we'll have a chance to meet again and perhaps continue this conversation at some point in the future. But for today, once again, thanks a lot. It's been a real pleasure.
Thank you, Kamil. It's my pleasure to be here today, and I'm keen to talk to you and the Polish market again in this future. Thank you very much.
Thank you, and Ernest, over to you.
Dziękuję, Kamil. To twoje pytanie ostatnie.
Thank you, Kamil. I think that your last question was somewhat surprising, but truly important, because this event that we are attending right now may actually make many people aware that the ETF market keeps growing very fast in Poland, and it makes a lot of sense to provide translation of the product documentation or the website. The ETF market has been growing in Poland very fast, and the last year was all historical high in terms of trading volume and number of transactions. So that brings us to the end of day 2, but we have one more day ahead of us. Tomorrow we meet back right here at 11 sharp.